What's going on, guys? It's your boy SVJ. You already know we are on a day 7 of the boot camp. So if you made it this far, that means you really want this, guys. I hope you guys are putting the work, taking notes, and going back to the video if you didn't understand and redoing it. You already know. So, guys, today we're gonna talk about fair value gaps. It's super important, guys. Super important, the fair value gaps in the market. I need you guys to understand this and know what a fair value gap is. Remember, we already went through liquidity and resistance and support. We already went through break of structure. Now we're going to fair value gaps. This is really important. Those are three confluences. I'm gonna show y'all and put them all together today, one by one, so y'all can know how to use them. It's really good confluences that you guys need in the markets to make money and to identify where the markets are going. So what is a fair value gap? A fair value gap is a retracement confluence. Remember, you guys are gonna see this type of thing. Let me show you what a fair value gap is. So let's say we're on a bullish market, right? We're going up and down, doing higher highs, higher lows, right? These guys are going to see a fair value gap form in the middle of that of that um of that lower low. So you're always gonna see a fair value gap when the market's bullish, let's say, right? Market's going up, higher high, higher low. The market always want to retrace back to that fair value gap. You're always gonna see the market retrace back to that fair value gap. You can see another fair value gap, same here. Boom, another fair value gap right there. Market always likes to go up. He makes 3 or 4 candles in the middle of this going up, and it comes back to grab liquidity and then continue going up. So you could literally enter a buy position right there with your stop loss right there, aiming this highs right here, this nearest highs. You can literally aim those nearest highs and make some money right there, or you can aim a little higher. Depends where. I'm gonna show you on a sample. I'll show you guys on a sample. Same thing when going down. When we're going down on a downtrend, right? Oh shit. Hold on, let me do it again because it's a shitty ass shit. So when we're going down, we have a bearish fair value gap. It's a bearish. We put them red. I like putting those red. I have bearish fair value gaps right there. Okay, always gonna want to go for that 50% right there where you see this little line. Is always gonna want to tap that and then continue his way down. So market shooting down, hits that higher low, and then goes for the higher high. Bam, higher low and lower low. So it's gonna go for the higher low, hit that higher low, and then continue going down, hit that higher low again, grab liquidity, and continue going down. Market always gonna do that. Grab liquidity right here, grab liquidity right here, grab liquidity right here. It's always gonna go up, come back down, grab liquidity, and then shoot back up. I always like to do that. Same thing with going down. We're going down, grab liquidity, full, and then continue back down. Easy, guys. Easy. As you can see right here, on this example, this is what a bullish fair value gap looks like. You're gonna see 3 candles most of the time, and one big one in the middle with this little ticks right here, these little wicks in between of it, but a big gap right there. That's a fair value gap. This is an imbalance. We call it imbalance and fair value gap. You can call it whichever one you want. Same thing with the bearish. You're gonna see 3 candles going down and a big one in the middle, and these little wicks and a big gap. That's a fair value gap. These fair value gaps arise when buying or selling pressure is significant, resulting in a large upward or downward move, leaving and behind imbalance in the market. That's it. Exactly what I was explaining to y'all. Let's explain to y'all in the markets live. Let's see, not live, but like in the market, so you guys can understand. So you're gonna see imbalances in the 4 hour, in the daily, in the weekly, in the 5 minute, the 3 minute, the 1 minute. The higher the time frame, the more it respects it, and the more it's likely to go to. So if you see a fair value gap, let's say on the 4 hour, right? We see a bearish fair value gap right here. You guys can see we have a really big bearish fair value gap right here on the 4 hour, right? What the market did, it shut down, made this big fair value gap, this big imbalance. You don't see no candles in between of it. You see a big imbalance right there, like a big gap right there. Market came down and filled it in. He touched it again, and what it did after he touched it, continues its way down and continue making more fair value gaps. We have another one right here. We have a smaller one right there. We have a, let me see. We have another one right there. Another fair value gap. You can see them always. Market's gonna tap it, continue down. Look, he almost touched it, but he didn't touch it, and continue his way down. You have another fair value gap right here. Look at this fair value gap on the 4 hour. Came down, came back up. It got disrespected. This fair value got disrespected, and then it continued going down. Sometimes it disrespected and changed direction. It all depends. But yeah, super easy to identify. That's a bearish market. Let's look for a bullish fair value gap. Let's look for a bullish fair value gap. We have one right here. Let me take this off. We have a bullish fair value gap right there. As you can see, we have this bullet pressure right here, and we left a gap. We don't see no wicks like this one. We don't see right here. There's no gap. Right here, there's a gap. You see right here, there's no gap right here. So you could identify where is this a fair value gap, where is not. So we have a fair value gap. Market shot up, came back down, respected it, came back up, continue up, and then it just disrespected after. All depends on the section and all that. On the session you trading, all that stuff. Have another bullish fair value gap right here. You could identify these always, guys. Super easy to identify. Super easy. Super easy to identify. So let's drop down to the 5 minute. Look for a 5 minute fair value gap, and so yeah, guys could understand how can we use it to make an entry point. So, what do we have right here? Let me see. Let me look for a good example, bro. A really good example. Where can we find this example? Let me see something. We're in an uptrend right there. Okay. So, remember how I was telling y'all about the trend lines, right? About the trend lines, right? So remember, we have a trend line. We got a support right here. We're bearish right here, right? We're going down. Market tapped 1, 2, 3, 4, and then continue going down. And what did it do here? Broke structure, right? This candle right here, we broke structure to the upside. We broke structure to the upside with that candle right there, with that red candle. Remember, we went over breaking structure yesterday, right? Beautiful. So that's two confluence. We broke structure, and the trend line already got disrespected. As you can see, it got disrespected. We got bullish momentum coming in. So what am I looking for now? Buy pressure. We're looking for a fair value gap now. So let's look for a fair value gap on the 5 minute at least. We literally have one right there. Small, tiny one. Not that big. We have a small, tiny fair value gap right here. Bullish one. So we see a fair value gap, right? We drop down to the 1 minute. We drop down to the 1 minute, right? It's another confluence. I like taking my trades on the 1 minute, looking for it on the 5 minute, taking them on the 1 minute. So market shot up, break of structure, came up, right? And we had that pullback. Bang to that fair value gap. Exactly there I would have got in and I would have aimed these highs right here if I want to go longs. Put a stop loss below this fair value gap, and there we have it. We would have won longs right there. We could have put a 20 to this near high or all the way up here. Market did ended up going up there. So check it out, guys. There you have it. We tapped the fair value gap, right? Market broke structure to the upside, came back down to that 5 minute fair value gap. Great entry, and market just kept shooting up, kept shooting up, kept going up, kept going up. And it tapped it again right here. It tapped that fair value gap again. As you guys can see, tapped it again. Tapped it here, my entry point. Tapped it again, but it never touched my stop loss. It never went below, the fair value gap. So it respected the fair value gap, and it just continued going up. Beautiful. Would have been a beautiful trade right there. Super easy to identify, guys. Fair value gaps work. That's a confluence, guys. That's a really good confluence. Let's look for a fair value gap on the downtrend now. Let's look for a fair value gap on the downtrend. So right here we see down. Oh no, that's not one. We have a big wick. I didn't see that big wick right there. We have a fair value gap right here. That's one fair value gap just formed right there quick. Bearish fair value gap. So we drop down to the 1 minute, right? And to look for this is gonna be a pain in the ass. So it went back a lot on the 1 minute. Where is it? It's not gonna show me where it's at now. Wow, it's right here. Okay. So as y'all can see right here, we drop to the 1 minute, right? Well, we have a break of structure right here. We got a break of structure right there. Bam. A disrespected trend line. We tapped it a couple times right there. So I can see the trend line. The trend line got tapped here, went up. We were on a bullish trend line, right? Tap here, went up, went up. And what we do here, we disrespected it. We disrespected the trend line. Formed a 5 minute fair value gap. I would have put my short position right here. Right there. With my stop loss above that fair value gap. And I would have aimed these lows down here. I could literally went all the way down for those lows. Wow. But aim those lows, or you could just, aim the nearest low. But if you want to get a big profit, but you don't need to do all that. Go aim these lows down here. So what market did, literally shut down, broke structure, came back inside of this fair value gap. Exactly, came back inside of it to that 50% that I told you, the fair value gap. And what it did after that, came down, tapped it again, and just continued going down, but always respected it. It did not disrespect the fair value gap, guys. Respected it, good as entry. That's a confluence to go in and put your position in, guys. Super easy, super good to do. And I'll be going into most of my trades with my fair value gap. That's a confluence that really works, guys. Super good, super easy to identify. Here's the next step. I even have an indicator that shows me all my fair value gaps, guys. I have an indicator that shows me all of my fair value gaps in the market that are being formed. So any time frame, it shows me the fair body gaps. It's literally called, you go to the indicators, right? And you put FVG, and you're gonna see SVG by Nephew Sam. You're gonna click it, and you're gonna put a little start to it, and it's gonna show you every fair body gap. Red fair body gaps that are formed on any time frame, and the bullish ones too. So that way you don't have to mark them out yourself. You're gonna see them on the charts. Let's say you see a bullish fair body gap on the 4 hour, right? You mark it out so you know it's there, because once you drop to the 30 minute, it's not gonna show you unless you mark it out. You gotta mark it out. So what I be doing, I be marking out my 4 hour fair body gaps before I enter a trade, so I know where the 4 hour fair body gaps are. So when I drop down to a lower time frame, I can still see my 4 hour fair body gap being respected or disrespected, whatever it is. But this is really important, guys. This indicator is really good, and I use it every single day to identify my fair body gaps, guys. Super, super good to use it, and to, you know, to have it. It tells you every fair body gap in the market recently, recently. So take a picture of this, guys, so y'all can know what's a bearish and a bullish fair body gap and how to identify them. And read this. These fair body gaps arise when buying or selling pressure is significant, resulting in a large upward or downward move, leaving an behind imbalance in the market. Exactly what I was telling y'all, guys. That's it. Easy to identify. Look how this bearish fair body gap came up, respected it, closed below that fair body gap, and just continued its way down. Easy, 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 guys. I showed y'all the 3 confluences that we went over. Let me see. The liquidity, the breaker structure, and now fair body gap. That's 3 confluences that y'all had there, that I showed y'all how to use all of them, and how to identify all of them, and how to use them. 1, 2, 3. Those 3 steps, how to use them. We still got way more to go, because there's a lot of confluences that are more important, that are important when it comes to taking a trade. But those 3 are like really common, and that you always gonna see them, and you could take trades off. Those are 3 common confluences that you could use, and they're easy to identify, guys. So there you have it. Those are fair body gaps, easy to identify, guys. I hope you guys watched the whole video, and if you did, you're really interested in trying to learn. I'm giving you a free sauce, guys. Super free sauce. And all you gotta do is just follow me, guys. Subscribe to the YouTube channel, like and comment. If y'all got any question, hit me up on in the Discord or my IG. I'm open to answer any question you guys have. And guys, I see y'all on the next video.